Only about a quarter of Gen Z adults own homes, and by 2026, many feel like homeownership is completely out of reach. We're talking about an entire generation, millions of people, stuck asking, is the American dream even possible anymore? High mortgage rates and sky-high prices mean the traditional path is effectively blocked. But what if there's a different playbook? What if this generation isn't giving up, but just rewriting the rules for 2026 and beyond? We've seen a massive shift towards equity investments, with Gen Z putting their money into the stock market instead of a down payment. Is this just a temporary pivot, or a calculated long-term strategy that redefines financial success for a new era? Let's break down the numbers and see what's actually happening. Alright, let's talk about the American dream, Gen Z style. Because honestly, the housing market right now for anyone under 30? It feels less like a dream and more like a competitive sport played on hard mode. Back in September 2025, National Mortgage Professional highlighted that a mere quarter of Gen Z adults actually own a home. That's a significant drop compared to previous generations at the same age. Then, just a few months later, in February 2026, Call Federal Credit Union published a piece acknowledging that while the aspiration for homeownership is still strong, for many Gen Z individuals, it feels completely out of reach. And it's not just a feeling. Redfin and Ipsos confirmed this when their March 2026 survey found Gen Z is truly the generation hardest hit by escalating housing costs. What this means for someone in your situation is that the traditional path to homeownership isn't quite the same as it was for your parents or even older siblings. But here's the fascinating twist. This isn't stopping Gen Z from building wealth. Instead of pouring every spare dime into a down payment that seems to move further away with every passing month, we're seeing a significant pivot. This generation is turning its attention, and its capital, to the stock market. We're going to dive deep into exactly what that looks like, from smart investment strategies to leveraging unique opportunities, all designed to build that financial foundation. But while 97% of Gen Z aims to own a home in the future, and 87% want to buy before age 35, only about a quarter of Gen Z adults actually own one today. This gap creates a real feeling of disappointment. As a Gen Z finance professional noted to Call Federal Credit Union on February 26, 2026, the American dream of homeownership persists, but for many of their peers, it feels completely out of reach. Why the disconnect? We've seen a perfect storm of factors. Mortgage rates, for example, have crossed the 7% threshold for a 30-year fixed loan, as reported by Freddie Mac on May 16, 2024. This makes monthly payments astronomically high. Couple that with declining affordability where home prices are simply outpacing income growth. The post-pandemic economic effects are still lingering too. Many current homeowners, who locked in historically low rates during 2020 and 2021, are now understandably reluctant to sell, keeping housing inventory stubbornly low. This makes it a fierce seller's market, and as Eric C. Peck highlighted in a Redfin Commission survey by Ipsos on March 2, 2026, Gen Z is the generation hardest hit by these rising housing costs. For someone earning the median income, that dream house just keeps getting more expensive, faster than their paycheck grows. The lesson here is that macroeconomic forces, like interest rate cycles and supply-demand imbalances, profoundly impact individual financial goals. This is why many are starting to play a different game. Gen Z's investment shift. This affordability crunch is pushing Gen Z to play a different game entirely. As reported by the National Mortgage Professional on September 3, 2025, with average 30-year fixed mortgage rates hovering around 6.5% and national median home prices having more than tripled since 2000, reaching over $420,000 in many markets, a significant portion of this generation is simply priced out. This isn't just a hurdle, it's a brick wall, redirecting their financial energy. We're observing a substantial shift in focus, away from accumulating a down payment on a house and towards more liquid equity investments. For example, instead of painstakingly saving for a traditional 20% down payment on a $420,000 starter home, a formidable $84,000, a Gen Z individual like 26-year-old finance analyst Maya Sharma might strategically allocate that same capital to an S&P 500 index fund or a diversified portfolio of growth stocks, targeting long-term appreciation. This represents a major departure from previous generations, where real estate, often through a FHA loan or VA loan, was almost universally seen as the primary vehicle for building wealth. Think about your parents or grandparents, their financial playbook, shaped by post-World War II housing booms and accessible interest rates, almost certainly centered on buying a home in their late 20s or early 30s. For Gen Z, however, this strategic pivot into stocks reflects a pragmatic response to current market realities. They're actively seeking alternative avenues for financial growth and stability when the tangible asset of a home feels increasingly out of reach. The lesson here is clear. When traditional paths are blocked, innovation in financial strategy emerges. This profound shift could fundamentally redefine how future generations view wealth accumulation, less about brick and mortar, and more about diversified, accessible portfolios. It's leading to a new dynamic, where, for many like Maya, renting becomes the default, not just a temporary stopgap before homeownership. This isn't just a slight adjustment, it's a full-blown transformation in how a generation approaches housing. We're seeing Gen Z become what industry experts are calling a renter's nation. Back in 2020, even before the wildest inflation surges, Gen Z already made up about 22% of all rent applicants in the US. That's a massive slice of the rental pie for a generation still in its early 20s. Think about it. While the dream of homeownership still burns bright for many, the reality of high costs means actively engaging with the housing market, but primarily as tenants. As Deanna Lubin, a real estate analyst, noted on June 18, 2024, this strong presence in the rental market means Gen Z is a transformative wave for property owners and house flippers. They're not just passively renting, they're driving demand and influencing market dynamics. This shift is less about choice and more about necessity. With average home prices over $420,000 and mortgage rates stubbornly high, renting becomes not just an interim solution, but a long-term strategy for many. For example, a young professional starting out in a major city like Austin, Texas, where the median home price can easily top $500,000, might find a modest one-bedroom apartment for $1,800 a month a far more practical option than saving for a down payment that could take years, even decades. This trend suggests continued high demand for rental properties, potentially influencing future rental market dynamics and development, which pushes us straight into the next big question. What does this mean for the traditional milestones of adulthood? This brings us to a crucial point. The age of delayed milestones. On one hand, Gen Z has really strong ambitions. A Coldwell Banker report, based on a Harris Poll survey of over 3,000 U.S. adults, found that Gen Z is actually twice as likely as previous generations to aspire to buy a home before age 25. Think about that. 97% want to own a home, and 87% aim to do it before they even turn 35. That's a powerful desire for early homeownership. But the reality is a stark contrast. Despite these big dreams, only about a quarter of adult Gen Z actually own homes today. This isn't just a minor hurdle, it's a significant market friction. As a Gen Z finance professional told Call Federal Credit Union on February 26, 2026, even with their peers' strong personal desires, the American dream of homeownership often feels completely out of reach. This gap between aspirations and reality is causing a ripple effect. An article by Sidney Lake for Fortune, published November 10, 2025, highlighted that a staggering 84% of Gen Z are delaying major life milestones, like getting married, having children, or even changing careers, solely to afford buying a home. It's an example of how homeownership often underpins other major life decisions, and when that foundation is shaky, everything else shifts. The lesson here is that while the desire for traditional milestones remains strong, economic realities are forcing a re-evaluation of the timeline. The road ahead for Gen Z housing looks like it will continue to be complex. So, what does this all mean for the road ahead? Well, with low housing inventory, largely due to existing homeowners clinging to their historically low mortgage rates from the 2020 to 2021 period, and current 30-year fixed mortgage rates often above 7%, the housing market remains incredibly challenging. This isn't just a passing phase, it's a fundamental shift. Deanna Lubin, writing on June 18, 2024, highlighted how the rise of Gen Z as a transformative wave is actually changing the focus for real estate investors themselves, with more emphasis on rental properties and house flipping rather than building entry-level homes for first-time buyers. The National Mortgage Professional reported on September 3, 2025, that with homeownership feeling increasingly out of reach, Gen Z is making a strategic pivot towards equity investments. Think about it. If the traditional path to wealth through real estate is blocked, people will find another path. This suggests a long-term re-evaluation of wealth-building strategies, moving away from bricks and mortar in favor of stocks and other financial assets. For someone in this situation, it means potentially building wealth through diversified portfolios, rather than relying on property appreciation. The Gen Z Housing Playbook, as discussed by Call Federal Credit Union on February 26, 2026, emphasizes this continued adaptation. The author, a young finance professional from Gen Z, notes that while the American dream of homeownership persists, for many of their peers, it feels completely out of reach. This generation is finding new ways to achieve financial goals outside of these traditional paths. For example, some are pooling resources with friends or family, or focusing entirely on maximizing their equity portfolios, like investing in low-cost index funds, aiming to accumulate a larger down payment over a longer period. The lesson here is clear. Adaptability is key when traditional pathways become less accessible. Lubin notes this generation is adapting, with only about a quarter of Gen Z adults owning homes, a significantly smaller proportion than previous generations at their age. The lesson here is that while the traditional American dream of homeownership might feel out of reach for many, Gen Z isn't giving up on financial stability or wealth creation. Instead, they're strategically pivoting, with many, as the National Mortgage Professional reported on September 3, 2025, turning their attention and capital towards equity investments and other diversified assets. This isn't a retreat, it's a redefinition of what making it looks like in 2026. It's about building wealth through new avenues, optimizing rental situations, and delaying major purchases until the numbers actually make sense. So, how have you seen the housing market shift your own financial goals? Have you or someone you know pivoted from homeownership to other investment strategies? Drop your experiences and insights in the comments below. I'd love to hear your perspectives. For more deep dives into how economic shifts impact your personal finances and what this means for someone in your situation, make sure to hit that subscribe button. And if you're curious about specific investment strategies Gen Z is exploring, my breakdown of how to invest in ETFs for beginners is exactly the next thing you should watch.